Good afternoon, everyone. Let's get a camera on here. There we go. All right. So, MT Live, and what are we doing today? We're going to talk about finding opportunities. Once you learn what to look for, how do you find it? Well, you could build an interest list, of course. How do you do that? With software. Right? Zero in. Find me stuff within this price range with at least that kind of volume that I would specify a minimum or an average. And then from there, you've got a broad list. So if you were to say, show me everything between $7 and $1,200, you'd probably come up with about 2,000 stocks, maybe a little less. And with volume, you start cutting it down. Maybe you'd get down to like 1,200 or so, defining it. But once you know what to look for, say, for example, you took the MTS course or the swing trading course or the option course, and you were looking for credit spreads. Well, how would you find that? Well, I could tell the software, you know what? Find me stuff that's going sideways in a wide whippy pattern. Find me a bullish 180. Find me a wide range bar. Find me, a bearish 180, so on and so forth. So scanning software is something that puts you in the ballpark of what you're looking for. All right. How do you program it? And we've already done that. How do you get it? Well, we'll show you how you can utilize someone else's software that we've created for on our own, like not their software, but how we've used their software for the things we're looking for. And when you become an MT student or subscriber, if you're using that software, we give it to you. We offer it to you to use on your own, explain to you how to use it, and so on. So, with no further ado, let me welcome Dan Gibby, and we'll show you what we do and some background.
And welcome everybody. Yeah, Greg, the way you were describing this software, it sounds like an amazing assistant that you have
It certainly is, Dan. We've used it for decades.
doing all this work for us.
Yeah.
And, true story, I say this once a year. With this technology that Greg's going to show you, how he scans and sets these things up, Greg and I literally were at a trade show in Orlando in an elevator, maybe 8 floors. I said, Greg, we forgot to, give some trades tonight. He's like, hold on. He gave me 3 trades as we're going down the elevator on his phone. And so that's how powerful this is.
Yeah. And Robert's saying AI technology. It's not AI technology, not at all. And I won't say AI can't do it, but how would you tell AI how to do it? That's the magic. In addition to, and I'm not saying AI can't do this either, but how would you tell how to do it? How would you tell it how to find? Well, I'm just eyeballing over there in different time frames, at least 20, if not more, different criteria scans to look for easily. So AI is an amazing thing. But this software, I don't even want to say it's more amazing, but for what we utilize it for, it's more amazing.
Exactly. So this is our approach. We'll just go through a couple foundational slides here but we're going to spend a lot more time today on actual scanning, so you can see the power of it, how you can find trades that are in your trading plan, your time frame, etc. But we're technical based traders, so I need a setup. And the next slide I'll show you the other concepts, but it's all based on Greg's course. So you know what a compelling pattern is, the time frame you're trading, it's in your trading plan. Greg teaches you how to proper position and money management. And all of this applies on whatever time frame that you are trading. Now, Greg came up with this term techno-fundamental approach. And so that just means, hey, we're looking at price, but not in a vacuum. We want to look at some other things to put it into perspective and increase the probability of that trade working. So we have market internals, both for swing and day trading tools, and then intermarket analysis, how different sectors, bonds and yields and things interact together, which gives us not only a heads up to where there might be opportunity, but to start saying things are not acting right here, the traditional intermarket relationships. So you're going to see us scanning for patterns today. This is our starting point. Every time Greg or I are looking at a chart of anything, that we're applying these other concepts. So we don't just say, oh, it's a breakout. Oh, it's a buy setup. It's a 180. We want to see what's preceding it. We want to see what the trend is. Is it on support, multiple time frames in alignment? Greg just mentioned that the AI can't do that. Is it showing relative strength or weakness to the sector, to other stocks, to the broader market? And then here's the things that you talked about on the prior slide: market internals, intermarket analysis. And once you have that, you push the button, you calculate position size, and you enter the trade and manage it on the time frame that you're trading for your trading plan. That's all that trading is. You could be the manager of Nordstrom, where you're buying and selling clothes or your inventory. This is our inventory, is whatever you want to trade: stocks, options, ETFs, cryptocurrencies. That's the instrument, the underlying. But all of these pictures in our technical approach applies to any instrument that you want to trade. So this is one of our slides we show all the time. It's just 9 beautiful examples of bullish setups. They apply exactly opposite on the short side. And this is our starting point. So this is what the software is going to be looking for. And many more. And Greg's going to show you how to do that like a pro here in a couple minutes. But then it's our job to take this pattern and apply the other concepts on the prior slide to make a go, no-go decision, to set an alert, to monitor it, etc. So Greg, I'm curious, do you have in your scans, do you have one of these that you label, call it what you want, it's going up?
No, but one of the things that you learn that we teach is that all of these patterns, not all of them, but when you understand retracements, this is the same as this. It could be the same as this. And so while we look at different patterns, as you change time frames, meaning just because this doesn't have the middle bar, it means exactly the same thing. And that's the essence of call it what you want, it's going up. So while that is kind of a catchy little thing, call it what you want when it goes up, there's a much deeper meaning behind it. And the deeper meaning behind it is if you understand all of those concepts that were on that other slide, and on this one in particular being retracements, whether it's a wide range bar, whether it's a 2-bar reversal, a bullish 180, or a bull sandwich, or whatever different terms that we can come up with, as you look at different time frames, the essence of it is the same. It went down and it went up. And now, are they big bars? So when we look at these patterns, another concept would be, are they wide range bars, which are displaying commitment and emotions and potentially money? There's always money involved, but is it big, like big volume, let's just say, or are they small bars? Because, as you look at these things to differentiate the two, you can see them when you look at the chart. But even though you can see something, your mind has to process it. That's really the goal, is to train your mind to understand these pictures. And anybody can look at that picture and, I can call this a morning star or whatever name you want to come up with. But what do you do with it? That's the money.
That's a good point. Excuse me. So this is what we're not looking for. This is the opposite. Just the crazy oscillator, people trying to sell you some crazy bag of goods, which just confuses the objective systematic approach to reading candlesticks, which is what we do and what we teach. This is just, what do you call it, Greg? A rabbit hole of looking for the Holy Grail.
Yeah, they call it an Ichikumi cloud. Pretty fancy name. I guess it has some connection there to Asian Ichikumi. I don't know. Where the hell that name probably has some kind of meaning to it. I don't know what it is, but what's the cloud? Oh, it's supposed to be, this is support and this is resistance. And somehow when it reaches the cloud and the lines are trending down, you're going to sell short in the cloud. That's my uneducated interpretation of what it is. But, the prices are in the cloud. No, they're out of the cloud. It's brain damage. The guy that created it's probably making good money if he, trademarked it. I know people sell courses on this stuff, but I mean, I talked a little bit, not this particular, but with that interview I did yesterday. I mean, this kind of indicator-based methodology has been around forever and ever, and it's never going to go away, because it's kind of like, give me the diet pill, tell me what to do, red light, green light. And now you got this fancy thing called an Ichikumi cloud. It's very colorful and pretty. And, you create a belief. Let me expand on that thought for a moment. What is your goal? And you're welcome to type it in there. What is your goal by attending this webinar or any other? I'll give you 10 seconds to give me an answer.
Learn takes a half a second.
For what reason?
To make money, of course.
To make money. What you learn does what? It's a guide map, a roadmap, tells you what to do, right? Which creates a belief system. How are you going to create your belief system that tells you to press the button to buy or sell or do nothing? Ichikumi cloud? Good luck. Good luck.
Right.
MACD around Venus with a stochastic. What settings are you going to set this thing to, or the MACD or the other? And all of these things raises questions. And I went through the same questions as you will, or you will. If you haven't, you will. It will create self-doubt, because you went to a webinar and they showed you how profitable the Ichikumi cloud is, or their proprietary indicators. And when it doesn't work, you'll just figure you're the problem. Worked when you saw it, must be something wrong with you. Oh, the trend line broke, but it didn't work. You must be connecting the wrong spots. I thought that. Do I connect the lows? Do I connect the closing prices? Which things do I connect there? And so that's the true rabbit hole or black hole, is this kind of stuff. Whereas when you learn fundamentals that are indisputable and you begin to internalize that, now you're getting somewhere. I'm not saying it's easy, because you got to train your mind to understand this stuff and, this discipline, patience, so on and so forth. And what Raul was saying, repetition, repetition. Yeah. So what Dan is showing now is a trend following matrix. That's part of the ETF letter. Why? Well, if the trend is up on the monthly time frame, the weekly time frame, and the daily time frame, odds are it's going to go up. Common sense. Up to where? Look to the left. It's at all-time highs. Nothing to stop it from going up. Oh, yeah? Why is it top out at certain times? Market internals. That's part of our three-legged stool. Well, here you've got all of these ETFs. They're different sectors of the market. Sometimes money rotates from technology, cues, into transports, or sometimes as interest rates begin to decline, money rotates into home builders and home construction. Other times interest rates go up and they run from these. War, aerospace, and defense. And, pharmaceuticals. Hey, government's after the healthcare industry. They're out of favor. They're getting beat up. So what this shows is, for subscribers, is that here is the prior week's trend. Is it the same this week when we look at it on the weekend, or did it change? Do we have any changes here? No, there's no changes. So you've got the previous week and the current week. And so we look for changes many, many times. When you get a change on the daily, sometimes it rotates into here. But when we review the trends, well, how long has the weekly trend been going up? How is the weekly and daily trend? Are they extended from support or the 20 MA? So noting what the trend is in multiple time frames and when it changes is one piece of information that we need to look at. And then as we look at these, maybe the biotechs are bottoming since the weeklies are in a downtrend. And this could have been the previous week. I don't know. This could have been in a sideways trend. And now this is up. So that for a fact that there was some bullish action, because what would turn it up? A deep retracement. It took out major resistance. It's making higher highs and higher lows. So this month, healthcare is in a downtrend on the monthly, and it's been in a downtrend at least on the weekly, and it's only on a sideways trend on the daily. So that sideways trend, because these are in downtrends, maybe it's ready to take another nosedive lower. So we need to look to the left to see, is it near support? Right? Is this near major support and going sideways? Or does it still have room to run to the downside? Is there a void? So there's a lot more to look at, but this is a great tool that I created and I update every single weekend as to these trend changes and where's money flowing into. And we don't have anything red here, but at this moment in time, I don't think there's anything red. So historically, when we see a massive green and internals are giving us a risk off, you better look out. Accidents are going to happen. And it's just the same when it is a massive red, and the internals give us a risk on, start looking for what's showing relative strength. So this is scans, right? Part of the scans, right?
For the morning.
Yeah. In the morning. So gaps. Well, this is a green wide range bar. This is 180s, bottoming tail bars. Here's gaps. What is an MBT times 2? I get that question a lot. That means that in multiple time frames, they're going sideways and not tight, erratic. Why would you want to know that? Credit spreads. If it's been erratic in 2 time frames, finding put spreads, iron condors, put spreads, call spreads, condors, In other words, it's putting you in the ballpark. It's not a red light, green light system because you have to go look at the chart. So once you look at that chart and you look at whatever it is that's listed here, you click the name and it loads the chart up for your daily, weekly, monthly, whatever you want. And so with the gaps, you'd be looking at least daily, 65-minute, 5-minute, and so on, and bottoming tail bars, and so on and so forth, bullish 180s. So it tells us here, take a look at this because this is what you learned in the course, and this is putting you, go pay attention to this one because these patterns are opportunities. That's the bottom line.
Yeah, and so I'm typically very busy at the open because I'm managing opens and I already have a watch list from scanning the night before. But I purposely put this one in here. You know, we teach people how to trade for 1 hour and leave for the day. Go play golf, do whatever you want to do. And so all these scans are meant to do that. You could just show up, wait 5 minutes, and every single morning, Greg's given us ideas in the green trading room through these alerts.
Yeah.
So this,
Let me answer Raul because I didn't see that. The thing was scrolling. Is it the trend of pivot? Yes, it's based on the trend of pivots and retracements. How deep is the retracement, up or down, and the trend of pivots related to that time frame. There's an explanation in the resources section of the member area.
so this is just an example of an igniting gap over a red bar. That was one of those scans on the prior page. Look, just show me if it's gapping over a big red bar, because that's a shock pattern. And then as Greg said, then we're looking to, with our, all the other concepts to see if I want to trade it or not. So here's an example of one that we are still in, our ETF trader. So we found this on this day. So this is a daily chart. All of our charts are this simple. Red and green candlesticks. The blue is the 20, green 50, red 200. Just a quick visual aid of the trend in multiple time frames. So it broke out, going sideways for 3-4 weeks, gapping over a red bar. Look to the left. We typed it, but the price void. Every trade we take has to have a price void, which means look to the left and there's insignificant resistance for longs. So this was in Telegram. It's an open trade. We send it to subscribers. We're buying the ARK-K. It's a bullish gap, 180 breakout. What's a 180 mean? Ugly red bar immediately followed by that red bar being negated. At the 20 MA, bullish weekly. So our multiple time frames are in alignment. And I made this chart over the weekend. It's higher now, but we have a $12, $13 unrealized gain from this that we found on the gap thing. You've heard me mention the green room a couple times. This is where we start at 9 a.m. pre-market, which we post on YouTube just for a half hour or so. And this is where, I use the term, it's where we walk the talk. We take Greg's course and option courses, and we're trading together. We're scanning together. We're answering questions together. We're managing opens together. It's ongoing education throughout the whole day. So, come check it out. Two months for the price of one. And then there's some other discounts in there. You can go check it out at that link. This is just a visual, as Greg said a moment ago, about credit spreads. So even if we don't find a beautiful directional trade, we love credit spreads because we just find a pattern. And all we have to do is say, well, I don't think it's going under that support level. And then we have a checklist, make sure the spreads are tight, adequate premium for the days to expiration. You collect that money, goes right into your brokerage account, and the stock can do whatever it wants, up, down, sideways, just stay above the short strike and you keep the money. So it's a high probability trade setup. So here's an example. This, I think this was FedEx at the time. Yeah, right here, FedEx. So it gapped up here. Would I want to buy FedEx gapping up here to resistance? No. It's slopping around and it's gapping up again. Do I want to sell? Do I want to buy this? Not really. It's sloppy, but look at this green line down here. So, Greg, you know, I love asking you this question. On this gap up, let's say 5-minute high. And the reason I say that is you just want to make sure it doesn't come crashing down for some stupid reason. And it's holding the gap up. So this 215, we're going to sell those puts, which means we take in premium and we have an obligation to buy the stock at $215 a share if the put buyer wants me to. But as long as it's staying above here, the put buyer would never want me to do that. And so we collect this money, $1.15 a share. If you sold 10 contracts, $1,150 goes into your brokerage account. But we manage these to make weekly income, not that I want to buy FedEx at $215. So, you know, we just closed it here, 60% of max profit in 1 hour. As the stock rallied in 1 hour, we took our money off to the next trade.
It doesn't, not being transparent, it doesn't always work that way every time. But the whole idea there is, you know, probabilities, which is what every trade is. When you see a pattern like that and you think, is it likely to go down there? If I said, is it likely to go down there by next year? You'd say, I don't know. Certainly possible.
Right.
Well, what about next month? Maybe, you know, you never know. Something can happen. Well, what about in 7 days?
All right, good point.
You know, that sounds reasonable. So
Right.
Dan asked me a lot of times, what do you think about this for option trades? And I'm like, that's reasonable. Right. So I don't get into the nuances of it because of the pattern, because he knows, you know, what I'm looking at and what I think. And so he's looking for that some confirmation or my input on that. And so without giving a whole lot of detail, if I say it's reasonable, that means I'm agreeing with him.
Yeah, and so this one, you know, we got good premium for going so far away because this is one of our strategies. It was after earnings, so this was a gap up on earnings, and we do these within the first 30 minutes, and the premiums are still jacked. Jacked, I mean juicy, which is why I have this orange juice down here. I call it the juice bar. When we find a pattern, it's like, let's go to the juice bar and see how much we're going to get paid for taking this risk for this many days. This is just showing you our, you know, we have 3 separate advisory letters, options, ETFs, and then the advisory is stocks and options. We track all open, all closed trades. This is just one from the ETF letter a while back, but just to show you how we track things. And we give live trades and updates in Telegram, which, as you know, works all over the world. And you could be at work, golf course, and a trade idea comes in. We give you the chart, and you're like, oh, I like this trade. I'm going to take it. So this is Greg's swing trading course. He just well, that's a path to financial freedom. That's an article, I guess, you wrote. But yeah, check this out. This is the.
No, that's not an article. That's a page on our website that someone to know that not familiar with Master Trader, read that. I'm not gonna, you know, I'm not saying, hey, you know what, just go do this because I told you so, this course, but you kind of get to know us a little better.
No, you're perfect. All right, so we purposely saved more time for this topic. So Greg's going to show his TC2000 and let's get to work on scanning.
All right.
And we'll be
And you
happy.
could drop a link. Well, you have the link there, but just to make it easy for everybody for the course. Oh, you know what? I think this is still live because someone remembers, hey, you guys sent out something.
Right.
Where the heck is it?
Yeah, I think Greg's looking for a coupon special that we had last week.
Well, check that out anyway. Go ahead.
All right, yeah, we're ready to scan.
Okay.
And we'll be happy to look at any chart that you all want, regardless of it not coming from a scan.
Okay. So this is TC2000. This is a page I created with scans that I created.
Wow,
And
I missed that one.
no, you have it, Dan. I
No,
just expanded it.
no. I rigged T I missed.
Oh, yeah, yeah. So here it's in the wide range bar scan. So this is going to look for those big bars. And so within here, this MBT10 means it's been going sideways, been chopping sideways for about 10 days or so. So that helps me look for stuff that is, igniting out of some kind of a consolidation. Um, Now you can see this one is a wide range bar, but it's not breaking out, but it's a 180. Right? So this was a big nasty bar down and it's flipping back up again and it's starting to turn higher. You get the little dot thing. Now you can see the retracement up here up toward that resistance area and pull back toward what we call minor resistance. So this yesterday, it certainly looked like it was going to go down and now it's up. So advertising, cyclical. I want to know what the sector it is. The broad sector, the subsector. It's going to report earnings on the 22nd, so that is next week. So these layouts not only provide you with the scan, but it provides you with other information that would be helpful. So Dan says the juice bar, and you say, is there some credit spread? And you slide this over and you go and you look at the option table. I mean, a $20 stock usually not going to be juiced up. But since it's going to report earnings next week, maybe there'd be some premium. And you just look. And then no, there isn't. And look at the spread. The bid-ask spread is it's 100%. It's stupid. There's no opportunity there. But that's what we call the factory work. This is the job. So wide range bars, right? There's Johnson and Johnson breaking out of a consolidation, and top of the range. You can see the weekly chart. It's at a significant resistance area. It's CRCL. Brett and I are on the same page here. This is going to be in play, right, at the end of the day and definitely tomorrow. So, and you could look at intraday charts, but this pattern pivots. What's a pivot? Simple, and it's just nothing proprietary here. Right? We don't believe in that stuff. If you depend on us for your education, we tell you everything. We tell you most of it here in an MT Live. But you want to watch MT Live for the next 2 years, or you want to watch the course over the weekend? A pivot, a bar with 3 higher lows to the left and right. You look to the left. When it comes down there, the thought process is there's likely to be buyers there. So it's going sideways. Pivot high. Now it's over the pivot high. But I don't know that it's going to close there. It's a little over past 12:30. That could be a topping tail bar at the end of the day. So one of the things that we have to learn as part of your thought process, think, well, show me the candlestick pattern. Okay, we do that. But we also teach you don't press that button until you know that the time frame is over or at least near over. Plenty of times over the years, I've done it. I pressed the button on a 5-minute bar and forgot to look how many minutes were left in it. And there were 4.5 minutes. And it was a green bar. And at the end of the 5 minutes, a topping tail bar. What do I do with that? Especially if it's a wide range topping tail bar. So we could look at different things. There's no bullish 1-2-3s, bullish 180s. I don't know why that's a 180. Sometimes it comes up with stuff that doesn't make sense to me. But anyway, that was a down bar. And that's an up bar. It looks like it can go higher. Just throw
Right.
that one on the list.
Right. And also look at the weekly, multiple time frames. That's a beautiful weekly
Yeah.
reversal.
So there are weeklies. So this isn't done yet. At the end of the week, it's probably set for at the end of the week. But maybe you want to find things, think prices have been correcting, and you want to find things that are close to the 100 MA. Right. So see the blue line here on the weekly, the 20 is equal to the 100 on the daily. So that's why it's there. So as prices pull back in this pattern, it's pulling back to support after a wide range bar. And this reversal here, it's hey, that's a trade setup that it could, move up above this high. Now, what I want a range expansion 180. There's none there. What about a bottoming tail bar? All right, IWM. It's in development mode. Right, the day's not over, but we've got a bottoming tail bar. And I took out the lows and it's turning back up again. Bottoming tail bar. MRVL, bottoming tail bar. Now, I could define this to say, just show me bottoming tail bars that are in uptrends at the 20, but it would eliminate a lot of things that I could be interested in. So what I found is that the more I detail the scan, what to look for, I miss opportunities. So there's 74 bottoming tail bars in here. This red dot means it's right now, it's below its opening price, where LRCX is above its opening price. So for that moment, it's better because it's above the open. But all I need to do is press the space bar to flip through these. And I could even put this software on automatic and say every 5 seconds, go to the next one. I don't even have to touch it. I could sit there and sipping pina colada, and it'll just show me charts, right? Like an assistant. eBay. So like something like this, just chopping sideways, you can just decide, let me just set an alert at the top of the range. Maybe it'll break out, and so on. What about touching the 20 MA? Cake, right on the 20 MA. It's not that attractive. It's kind of just chopping its way down. It's not ready yet, but you could see it showed me what I wanted. It's near the 20 MA. Now, something like this, I could be interested as a day trader. I would look at this chart, 65-minute, and I was like, nah, it's not tight enough. Go and read on the website, on the blog, under my name, and look at loose versus tight. That's still too loose. Right? So here are sloppy sideways patterns. Right? MBT times 2. You look at this, go look at the juice bar, maybe a call spread, maybe a debit spread down here. And if you see that, hey, this thing is really juiced down there, you better go look at the earnings. You see the 22nd. Let's take a look. Let's go down to, let's just call it 460 and see what kind of premium is down there. 462. Not bad for 2 days, Dan. I mean, this bar's not done. It's not a no-brainer, but a no-brainer would be down below here. Say if there was like 450-ish, 452, and you see like there's nothing. And then you say, well, what about next week? So you just keep scrolling. You go down and you look. And this is what we do. We find these opportunities for you. That's the weekly options trader. So 450. Now you see it's juiced. And I see that and I'm like, wow. And he's like, I better go check the earnings if that's like that. And then you get, it's going to report earnings. All right. These are strong, high volume today, weak. Well, not strong, it's strong volume. These are strong near 52-week highs, near the lows. Yeah, so weekly, same thing, different patterns, different time frames. Now, gaps, again, I share whatever you want as become a student or a subscriber, or all of them. Makes no difference. For me to send these to you, it's just click, 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 and I send it to you through this platform called TC Mail. So these are gappers. You can sort them by percentage gap. You'll find the big gaps. And again, the gap course, how do I apply this to intraday timeframes? These are the gaps. It kind of narrows things down. See, there's only 18 gaps here, so it's a little bit of a tighter gap scan. This one is just bearish gaps, so there's a lot more, but you can sort these by percentage. And then during the day, are they above or below the opening price? You can sort them by volume. Just show me the high volume ones. So you click it and it shows you the big volume ones. So this one gapped up and it kept going. Down here, these gapped above a red bar. So that should be bullish, but that one isn't. It gapped above a red bar and it died. What is a hard job to, I don't know that word, all that. What you're saying there, Brownie. Internalize? What is a hard job? I think everything's hard when you don't know how to do it.
Internal.
Nothing. Yeah. It takes time to learn. It's about repetition. So there's a big gap above a red bar, but what am I going to do with that? Yeah, it's easy to press the button and get in trouble. And so it puts you in the ballpark. Let me show you something else. Right? So now I would talk to you about what we call a top-down approach. See, these scans just look, I don't care what sector it is, just show me that pattern. That's all I care for. Show me a bullish 180. Show me something that's at the 20 MA. Now, the top-down approach is one in which, what's the broader market doing? And so as now we look at that, and we can look at S&P sectors, right? The broader markets, S&P 500, Dow, so on and so forth. The S&P sectors. This is a personal interest list of ETFs, and this is a very broad list of sectors. And if I scroll this over, there's like subsectors in here. So what I created was, when you look at these, well, first thing to do is like, what's outperforming today, right, out of sectors. And I can see airports, right, and air service are performing today with all of these 142 sectors. Well, what about in my list of ETFs? Bitcoin, right, the Bitcoin ETF. Right? Well, what about in the S&P sectors? Let's sort that. And it's healthcare. It's just interesting because yesterday was like the worst. It was a big red bar. So what I've created here and done, the wide range bar scan, a bearish wide range bar scan. What I did was I took that scan and I inputted it into the chart. And I said, if there's a bearish wide range bar, paint it black. And if there's a bullish one, paint it blue. You can choose any colors you want. So as I'm looking at my chart, I call it like kind of a visual aid. So a big black bar is going to make me think it's going to go lower the next day, but I have to confirm by looking to the left. Does it have room? What's the trend? And so on. So this has been bottoming. Potentially it could be a bearish 1, 2, 3 and break lower. But what if it gets back up to the top of the range? Our concept of bar by bar analysis would begin to reinforce the bottoming pattern. So I'll just set an alert here and forget about it because there's nothing for me to do. You could do a call spread on this maybe. You got to look to see if it's going to report earnings. Oh, because it's an ETF, it doesn't have any earnings. But now that I've done that, I've seen this. Well, let's look at something else besides healthcare. It doesn't matter what you look at, but say I'm going to look at energy stocks. Well, now it's going to load all the energy stocks in here. And now I can start looking for different criteria, meaning show me the energy stocks that are bullish. There isn't one. Well, how about bearish ones? Okay, there's one. Well, there's options in here. Right? If you're interested, options. So that's a bearish one. But it's not turned yet. It's in an uptrend. So I assume it's showing some relative strength to some others, but I'd have to start looking at them. But what about if there was a weekly wide range bar? So the weekly chart is over here. That looks interesting. Right? It's at resistance, but it's a power move. It's going to report earnings next week. So there's really nothing to do, but you get what I'm looking for. Well, what about something that had a big volume spike? None. What about over the last 5 days? Interesting. None. What's the price? What's the average volume? Any bullish 180s? I don't know why it's so coming up as a 180. Like I said, TC 2000 didn't always get it perfect. Range expansion, 180s, none there. Right, 1, 2, 3s, topping tail bars. That's bottoming tail. Well, it should have topping tail. I guess it was earlier in the day. I may have switched the code. So, by the way, I'm going to look at this later, but everything is there for you to see. I'm no great programmer. I'm more or less a guy that could look at stuff with some common sense and be a hacker. Meaning, as I learned how to use TC 2000 and I saw different codes, I'm like, oh, I don't understand what that means. Right? And so I formulated these things. Again, bottoming tail bar. I want a bottoming tail bar that took out a prior day's low. That's what this is. BT plus L1. L1 means yesterday's low. It took it out. Now, is the trend up? Does it have room to run? Are there topping tail bars? None. So on and so forth. Is the 65-minute sideways? Is the weekly sideways? Are there any of them that are touching the 200 MA? If I go back to healthcare, we're probably going to find something that's probably touching the 200 MA. Let's take a look. Where is healthcare? XLP? No, that's XLY. That's consumer discretionary. Yeah, at the top, healthcare. Nothing touching the 200. This means it was below the 200 and it got back above. What if it was above and lost it? No. What about below the 50 and regained it? No. What if, okay, this one was above the 50 and it lost it? Not a great pattern. Maybe it's going to drop. So I'm not looking for perfection. I'm looking to put it in the ballpark for what I'm looking for. And there you go. It was above the 50 and now it lost that. What about touching the 20? It's in the area of the 20. You get my point. So within this page, we can now look at sectors. What's performing the best today? What's forming the best on the week? Right. So far, not too much is lighting the world on fire here on the week. But the best performer continues to be technology, and it's continuing to go sideways. The energy you have, Brownie saying the energy we have is amazing. Greg, used programming logic is incredible. I wish I could tell you, I know programming and can create this kind of stuff, but I created it, so I did it. But some of those things, I just know the basics of what it means. The great thing is you don't have to do it. I've done it. So when you become a member of Master Trader, if you're using this software, which we have no affiliation with, if you subscribe to this software, they're not paying us anything. So whether you do or you don't, the only reason I would want you to do it is because it's going to be helpful to you, as you take the course and you can find the things that you learned. The data plan that you would need, Hugo, is the gold plan. This way, if you want intraday data, you need the gold plan. And the gold plan allows it to do more scans. So you could see how much stuff is in here. There's a lot of information that this is scanning for and finding. And the great thing about this is it's not a resource hog, meaning it won't drag down your computer. Even if you put this on your trading computer, it doesn't use a tremendous amount of resources. I mean, if say TradeStation could do this, which it could do some of this stuff, I'm sure, it can't do it as efficiently as this. If you could create this in TradeStation, your computer, unless you'd had a supercomputer, it would probably stop working. I'm telling you, that's how incredible this software is. It truly is. It truly is incredible. So, and again, you can see looking for trends. And this is something Sam, I don't know if Sam's with us today, but this is something Sam shared with me in the green room. And is it up 5 days in a row? Maybe we're going to fade it. Could be a call spread. So something like it's strong. I'm not interested in doing anything with this. I might be interested if it could take out these highs. The 65-minute is going sideways. It's pretty extended on the weekly here. So you know what? If this was to gap below this low, it's got earnings on the 30th. It could be a short-term trade. I do not use this for brokerage. They do have a brokerage firm, but for me, it's kind of clunky as far as placing trades. But you can place trades with this. I know one individual that's a subscriber that uses it to place trades, but I think he did day trades too. So it may take some getting used to, but you can place trades with this, right? Their primary focus, like you can see, if you click on this, you can open up a test account and try it out. But it seems to me the way it's set up, the primary focus is options. It's like kind of set up where you press like any of these software things where you set up credit spreads or debit spreads or puts and calls and so on like that. But no, it works. It works for that. But brokerage firms, there's lots of them out there. I use IB. Dan uses Thinkorswim. He's a primarily options guy. But this puts you in the ballpark of what you want to look for. I showed you gaps. I showed you combos. This is one I use on the weekends primarily. So here's all my interest list for my ETFs. And so this gives me a pretty quick observation as to what's happening there. Say on this oil and equipment ETF there, it's below the 20. Last week, a week ago, it was above the 20. This week it's below the 50. Last week it was above the 50. The 20 is not rising and not above, and the close is not above the 50 MA, and it's not above the 200 either. But it's only 0.1% above the 50 MA. So it's relatively close to it, but is it attractive? I doubt that. There you go. It's not attractive. I can tell by looking at this. Now I can sort these and I could, show these sorted right now by what's the weakest, what's the strongest, right? This one, but it's been strong for a while, and it's moving up. It's almost 12% away from the 50 MA, which means risk is rising as this is, going up. If I want to show me all the ones that are way above the 50 or percentage wise, it's all green. It's great, right? It's basing. It's consolidating after getting far from the 20 and the 50. It could break out and go higher. And you might go, well, higher to where? Maybe it's heading up here to new all-time highs. Brownie saying, what did he say? Yesterday you joined MT Weekly Advantage. It's insane. There's so much content. I've been watching everything, taking notes. Brownie, I'm going to use that as a promotion for Weekly Advantage. I could find a link. I'll tell you guys, if you want to get to know Master Trader and Dan and I, Dan does an amazing review of a trade every single week in detail as to why it was taken, the money management, how it was managed. This is, one of the most amazing services that we have. For $37 a month, it is a no-brainer. Lessons, you get MT Live sent to you. You get history of MT Live. You get the past trades and how they were handled, good, bad, or ugly, or great, with detailed information on that trade. So it's all about learning. But if you take the course, all of that stuff is about the repetition and learning again and reinforcement over and over again. And then with this software, if you have it, great. You don't need it because we're utilizing it, and within the letters, we're providing you with the ideas. So, you guys decide. And so as you look at these, and here's the S&P sectors, the same thing. As you look at these, you look at, say, semiconductors, right? It's all green. It's down on the week. But what if you want to look at the semiconductor stocks? Well, I've got a page, this linked here. And within that layout, there's scans. I mean, we should be charging like $1 million for this. But, we're nice guys.
No, I was just thinking that what you have here, other people could charge 5,000 for it, and we don't.
Absolutely. But look, Dan and I, we run a business. We're traders. We're in the green room. We love it day in and day out. We're going to do this. They're going to just kind of find me in my chair one day, like sleeping first, but you get what I mean. But look, we've been doing this, here in my prior company for 30 some odd years, give or take. We've created this, and it's there. It's available for you. Become a member. You don't have to take a course for us to share this with you, but if you subscribe to MT Weekly Advantage and you use the software, it's available to you, and it's powerful stuff. You can get overwhelmed with all of that's in here. So, you got to zero in on the things that you want to look for. But, again, this will put you in the ballpark, NVIDIA. And I don't want to know the room here, but, you can see all the same scans are in here. You can start sorting this and finding stuff. What's the strongest? Well, show me the weakest one. Show me the dogs. Well, there's the dogs. Maybe you're going to do a call spread. I'm just giving you examples as you learn the vehicles. A vehicle is the trading strategy. Now you can go find the trading strategies. So with that being said, consider the courses. If you want a combination of courses, I dropped that link in there with the there's old specials for, I think, the options and swing course. So take advantage of that. Weekly Advantage is a no-brainer. And we'll be back next week. If you have questions, email us, Greg and Dan at Master Trader. We'll talk then. Bye-bye.